Welcome back, ladies and gents. Welcome back. Good morning, everyone. It's about that time of day again, 7:30 a.m. Eastern Time, Monday through Friday. I got Marty Errico here with me from Traders Audio. I'm Joseph James from School of Trade, and I'm excited to do another crude oil morning prep. We're going from the screen to the floor this morning in what is thought to be the most unique morning prep available to traders today. I'm in Los Angeles in my home office. I'm going to be headed over all the way across the country to the NYMEX exchange in New York City with Marty Errico in just a few seconds. I'm going to begin today with a top-down technical analysis approach. That means I'm looking at charts. I'm looking at all the price structures that we see on these charts, and I'm going to use a top-down approach, meaning I'm going to start with a slower time frame and then move all the way to a faster time frame so we can get a complete understanding of what's happened in the past and try to anticipate what's going to happen in the near future. I'm going to analyze all the way from slow time frames all the way down to a minute chart here this morning, trying to anticipate the direction at the open. I'm looking for high percentage trading opportunities beginning at 8 a.m. Eastern Time. We're usually pretty accurate at anticipating those high percentage trades between 8 o'clock and 10:30. Of course, that's going to be the sweet spot for us trading crude. Moving forward here, I'll jump right into my charts here now, and then we'll head over to the NYMEX and we'll listen in to see what Marty's seen. Now, to begin first this morning, I want to start with the daily chart. And as we always say, kids, the daily charts, we don't trade off daily charts. The daily charts, they just set the stage. They just paint the picture. The daily charts bring us up to speed as far as what's happened over the past few weeks, few months, and possibly, if we want to zoom all the way out, possibly the last few years. I can zoom all the way out on this anchor chart, and we can see a very dramatic price wedge. Even more importantly, though, we zoom in now on this, and we can see here we've now begun to test major support as we've come off the highs. Now, this is nothing new. We've talked about this pretty much every morning for the past few weeks, but I want to show you here what I see on this chart. What I see on this chart is that we headed towards the highs of the range. We chopped around at the sideways range at the top, and of course we've come down. We've tested the trigger zone, and now we're in this transitional area just above the trigger zone. This is a huge clue, guys. A huge clue because in all reality, we've got the window wide open to go both higher or go lower. Now these trigger zones, these are Fibonacci-based tools that we use to try to gauge where in the structure of the market this price action is. And right now, 92.65 is that line in the sand that we talked about earlier on this week. A candle closing below 65, and we can expect to see 90.53 shortly thereafter. A candle closing above 65, and that leaves the door wide open for buyers to bring this right back up. The bottom line is the daily chart tells us that we have fallen off of the highs of this price wedge. However, the support at 92.65, 93.44 has clearly held strong. Now this daily chart tells me that we've got, again, 92.65 going to be the big bearish clue. If we close below 65, get ready for this thing to tumble. But this morning, though, we're intraday traders. I'm looking to pick up nickels and dimes on the way to my daily trading goal. So how am I going to make money off of this? Well, this daily chart gives me a big clue. It tells me to expect one of three things. Either one, we're going to bounce and move higher today. Two, we're going to bounce and indecisively chop sideways. Or three, we're going to bounce and fail and keep going lower. Those are the three scenarios that I see off the anchor chart on the daily. Now, let's see if we can anticipate all three of those scenarios happening. And as we talk about in our live trade room Monday through Friday at 8 a.m. Eastern Time, we talk about the fact that price moves in three different directions. One, right? Up, down, and sideways. So we better be able to prepare for all three. And every morning we have a quiz, right? Every morning the market gives us a quiz, and we want to be prepared for that quiz. And it's one of the easiest quizzes ever because all we have to do is prepare for only three questions. Imagine if, remember back in the day when the teacher gave you that quiz and, he or she would say there's going to be 30 questions, so study 10 of, study all of them and there'll be a 10-question quiz, right? Well, this is easy. There's a 3-question quiz every morning. Prepare for price rising, prepare for price falling, and prepare for price moving sideways. Let's take a look here now. Now we have a 4-hour chart, 240 minutes. This is what I call that happy medium between a faster time frame and that slow daily chart. This is going to give us a lot of clues here. The 4-hour chart is our window between both slower time frames and faster time frames. And what stands out like a sore thumb is this trend line. This trend line, of course, clearly showing us here, and you had to be a little bit resourceful to draw that trend line. You'll notice you had to really kind of figure that one out. You'll notice if you use the top of the bodies, we get a nice consistent trend line. Then you throw it in with the lows of this channel, and what do we have? Now we have a price wedge. What do we know about a price wedge? Well, first of all, we know this is a bearish wedge. Lower highs, right? Lower lows. So a bearish price wedge always tells me high percentage trades are going to be to the short side. So we know there's already a tone to the downside right off the bat. But it also tells me a price wedges are notorious for fake out breakouts. What that means is, look at this 94.44. This 94.44 might be the most important price level we're going to see today. 94.44 tells me that if we break higher, I'm going to expect a fake out breakout and a sell short at 94.44. So once again, if price moves higher, remember three opportunities here. If price moves higher, I'm going to look for price to bounce off the 94.44 and move lower, and I will be looking for a short at 94.44. We may also see 94.44 break down. It may easily break right through it, and if it does, a close on a 5-minute candle above 94.44, and I will then be bullish up to 95.70, 95.74. Okay, so we're prepared now if price moves higher. Price moves higher and we close below 94.44. I'm selling it short, bringing it right back down. Target will be 93.08. If price blows right through it, I'm buying pullbacks above 94.44 up to 95.70. Either way you slice it. Remember, that daily chart told us this price could jump. What about trading sideways? What am I doing if price trades sideways? If price trades sideways right here, our only option is going to be to sell the highs and buy the lows. If we trade sideways, sell the highs, buy the lows of this daily trading range. I'm going to show you that range in just a few moments. And then what happens if price moves lower? If price moves lower, we've got a big buy zone waiting here for us at 93.08. We've got another Fibonacci-based support level at 92.79, and we've got 92.13. As price moves lower, I am going to expect support to enter the market, demand to enter the market. And so as we move lower, I'm going to be looking for a price reversal to bring it right back up. What does this 4-hour chart tell me? It tells me we have an important level above us at 94.44. That's, in my opinion, the line in the sand. If we get and close above 94.44, you can expect this price to jump. But I will also be very excited to take a short off of that because we have that bearish tone to the market, and that's going to be the best selling opportunity we're going to get. If we trade sideways, I will trade by selling the highs of this trend line, buying the lows of this wedge, and if we fall, I will look to buy in the buy zone and bring it right back up to test the top of that wedge again. Let's keep moving a little bit faster now. We've moved down to a 60-minute chart next, and the 60-minute chart, boy, what a great confirmation. This 60-minute chart really kind of gets you excited here because now you can see what we thought might happen on the 4-hour chart. Look what we're getting now. Again, what if price moves sideways? What if price moves higher? What if it moves lower? If it moves higher, we're going to run into that bear channel high. Easy, easy money right there, guys. That's the high percentage trade. We know this a mile away. If I can sell the highs of a bear channel, or if I could buy the lows of a bull channel, I've got myself on the high percentage side. Okay, the odds are in my favor. And as we always say in the trade room, don't forget, markets love to blow right through the top of those channels, get stuck in the next sell zone, and then tumble right back down in. And what is that number we see here? 94.4. Hey, I recognize that guy. 94.44. There's your line in the sand. So now we can easily see we've got a great opportunity to sell the highs, 94.29 to 94.44. We've also got a great opportunity if we get that close above 44. You know we're buying here now up to that. There's that 95.15 area, 95.13, 95.70. Those will make for some great targets. We had projected 95.75, right? 95.70 makes for a great runner target there on the way up. What if price falls? I don't think price is going to fall just yet. I have a feeling we're going to get this price all the way to the top of this channel. And I'm going to show you the next chart. The next chart is going to show you why I expect price to go to 94.29, at least to 94.25. All right, so we're going to be short-term bullish, long-term bearish, and if we happen to roll over and play dead, again, like I said before, I am going to look to buy here, although buying at the lows is going to be a little bit lower percentage because of this bearish channel. So my sweet spot today is going to be selling that 94.20 to 94.30 right top of that channel. Let's keep going. Now let's put together the plan. Here's the plan. My VIP chart, my very important price levels chart. This is a chart that has helped us make a lot of profit in our live trade room every morning. And I want you to take a look at, first of all, the London trading session. The London trading zone is very important. You've got London highs, London's lows, right, marked up right in the middle. Above that, we have the reversal zone above it. Below that, we have the reversal zone below. What that tells me is that as we trade inside of this range, this, my friends, is where we buy lows and sell highs, right? This is where, if price trades sideways, now we know what we're looking for. We're selling the highs down to 93.60. At the lows, we're buying the lows back up to the highs, selling the highs back down to the lows, right? If you've taken that trade every time it happened this week, you made a killing with us, right? Look back at your charts. Look back at them. They're right on the blog, guys. You can see all the history. We've made a tremendous amount of profit using this zone all week, thanks to this two-sided sideways market trading we've been seeing. Now remember, we anticipated price going higher. Based on the London trading session, I can project a buyer target at 94.23. 94.23. Now, doesn't that line up perfectly? We've seen that before. Where did we just see that number? 94.23. There it is right there, except it's 94.29 on the 60-minute. So the hourly chart says 94.29. The 5-minute chart says 94.23. Sounds like a plan to me. So scenario 1, inside this reversal zone, scenario 1, we collapse. I sell short, take a partial profit target off at 93.60, take a final target off 93.29. Scenario 2, a 5-minute candle closes above 93.96. Above 93.96, I am getting long up to 94.23. 94.23 is my buyer's target. If price just wants to keep on going here, we've got another target up at the previous high of day, 94.44. Wait a second, there's that number again. Are you with me, folks? Are you seeing what we're seeing here? We have confluence, we have numbers lining up on dailies, hourlies, and now a 5-minute chart. Guys, that's what the buyers are shooting for here. 94.44, that's the line in the sand. If we finish this day above yesterday's highs, we can pretty much guarantee by the end of OPEX Friday, we're going to be all the way back up to the highs of that range. That's my plan if price rises. If price falls, like I said earlier, selling that reversal zone, partial target off at 93.60, selling down to 93.29. A candle closing below 93.01, and I'm now bearish. I will look, like I said before, as price falls, I will look to buy and bring it right back up, thanks to this sideways market personality. And again, if we do happen to tumble lower, I have another projected 92.31 just in case this market takes off to the downside. Again, a close below that, in this case, 93.01, a close below 93.01, and we are looking good to 92.31. Take a partial profit target off at 92.88, runner target off at 92.31. If you really like the action, leave that runner down to 92.13, the previous low of day. That's yesterday's lows. Alrighty, I've got my plan of attack. My numbers here this morning, 94.23, 94.44, and of course we can't forget about 93.01 down at the lows. Now, I'm just a lonely old day trader here in this comfortable home office of mine, and I know I got Marty Errico braving the elements down in New York City, pushing his way through the masses in New York. Marty, I'm sure you got a busy day already today over there. Sorry to keep you waiting here. Let me grab you here, and let's hear what you got to say. What do you see on the floor right now, Marty?
Oh, good morning to you guys. Good morning, JJ. Well, it's been a tough one this week. We've been seeing a lot of sideways activity, and I'm still thinking the same thing here. Sideways type of trade, 92.5 the low, 94.5 the high. You know, I'm liking that. I'm liking that high, that, you know, the 94.44 that you talk, because yeah, I got very similar levels, 94.44, 94.5, which is the same thing, if you will. So I've been looking at those two levels right there, and I'm thinking, you know, this is going to be a sideways, really choppy range. Again, we had, what was our low yesterday? We had that low today, what, 93.13? 92.13, sorry, 92.13. And that kind of lines up with what everybody's going to get. They're thinking 92.5 to 94.5, and they're straddling it in the options. So that's really what I've been looking at. Now, if we look at our supporting markets this morning, crude trading in the middle, right, 93.77, 93.78, right in the middle. So we've been watching crude continue to roll in the pit. I'm thinking by tomorrow we'll probably be fully rolled in, at least by tomorrow, at least in the products, I'm thinking. And then crude will be rolled by either tomorrow or we'll move on into Monday. But definitely our products will be rolled by tomorrow. When I say products, I mean RBOB and heating oil. So RBOB this morning has been just like crude, just chopping it up in the middle of its range still. RBOB is in its range. We were watching here RBOB trade 285.65 today, and we're watching decent volatility, but we're going to get to volatility in a second as we roll down the checklist. So, all right, so we've been talking about crude in the middle of its range, RBOB in the middle of its range. We have heating oil in the middle of its range. I have 288.10 on the heating oil, so we are in sideways trade for all three markets. So it lines up this morning, and at least we're not confused, right? We're also looking at the Brent crude, 103.55, in the middle of its range. So this sets us up with an opportunity where we could have all these markets in rhythm with each other, and we can use one of them as the leader. And I'm thinking on RBOB and heating oil, they're leaders today. Brent and crude are the laggers. So again, I'm looking at RBOB, and I'm looking at your heating oil to be the leaders, and then the other guys are going to be the laggers. So we're watching RBOB with about 25% implied volatility. So sorry about that, guys. So I'm looking at the volatility here, and I got 25% volatility in the RBOB, so I'm thinking that's why we would see RBOB and heating oil lead the way, and then we'll watch Brent and we'll watch crude follow suit. Now, let's talk about the volatility. Vol was really extremely big yesterday. We saw it come off late in the day, and we saw crude trade higher. Vol's still holding these levels around 25%. OVX trades 24.48 yesterday, so that's where it closed. So this high volatility, well, there was higher volatility yesterday, but this mid-range volatility gives us just an indication that we'll be in a mid-range trade. Large trading ranges. Gamma has been nice bid, so we've been seeing the break-even ranges plus a little bit more, and we've been seeing just decent trading ranges, and that's what this volatility is giving us right now. When we see it spike up dramatically like it did yesterday morning, you'll see the price trade lower. At this moment, in this scenario, there's higher volatility in the lower strike levels and lower volatility in the higher strike levels. That's not always the case. That's not always the case. Just a scenario for today. Just a scenario for this week we've been looking at too. All right, so 25% implied vol. Vol index trades 25%. I got open interest here in both contracts here. I got it above 300,000 in July, above 100,000 in the June. So open interest currently stands in the June contract, 127,321. We're looking at it in the July contract here. July contract, open interest 309,229. So guys, higher in open interest, that could tell us that, you know, JJ's selling the high of the range could be in play. That indicates there's a little bit more shorts in the market due to higher open interest. So it would make sense to trade this thing sideways and, you know, sell the highs. Alrighty, so let's continue on here. As I mentioned, we're looking at open interest here in your RBOB and heating oil as well. RBOB, I got 77,028. Heating oil, I got 74,582. So again, the open interests are just a bit, they're transferring here into the July contract. So we've been watching that as well. All right, let's talk about here your dollar. We talked about basically our divergence markets. We talked a little bit about volatility. High delta also in the market as well. Let's talk about our risk on, risk off sentiment and take a look at your dollar index here. Again, dollar, ladies and gentlemen, has been trading 83.97 even, just right below that 84 level. Again, the $84 level. We didn't hold above it. I mean, we were talking about that the other day, and we were trying to get an indication out of this dollar to see if we could stay above 84, and we didn't. So we have to stay above 84 for this crude to really get down to 90 and tank. And we haven't been seeing the dollar staying up above 84. I mean, like when I say above 84, 84.10, 84.20, it holds, finds levels, makes itself comfortable up there, you know what I mean? So, alrighty, dollar here just has been trading higher today as we have the crude trading lower. Euro trades lower, risk on sentiment here. We can attribute about 50% of the movement of the range to the dollar and the euro, and we can attribute the other 50% to supply and demand. So we are looking at this nice here range here, again, due to this dollar, at least 50% of it. So this dollar here trades 83.96 half, up about 20 points on the day. Euro down about 20 points. Bonds, unchanged, 144.06. Bonds are unchanged, 144.06. Real quickly, let's look at the spreads again. I'm looking over at your Brent WTI spread here this morning here. Brent WTI spread. Boy, doesn't it give us an indication or what? This Brent WTI spread, 982. That definitely screams sell the highs to me, right? That Brent WTI spread, 982. Calendar spreads, 30 cents, 28 cents, and 30 cents again. So, wow, these spreads are really backwardated. We're looking at huge backwardation in all our spreads. I got in the crack values 87, 97, 77. So that's giving us that 87 handle equivalent for crude to trade down into the 92 handle. So, I mean, we're looking at a couple markets right now, the spread in the supporting markets, and they're telling us a bit lower here today. I mean, yes, we are a little lower on the day, but nothing significant. Yeah, we're 60 cents lower from yesterday's settle, but they're thinking that they can sell the highs. Again, we will probably see just a little bit of a bid up to that 94.44 and then turn around and sell. Again, the spreads are in line. My things are pointing to lower markets, so my indications here. So as we continue on here, I just want to take a look at some big strike levels that were trading in the pit. So I mentioned they were straddling that 92 half to 94 straddle big time here, over 5,000 times in the pit with size associated with the trade. Like I mentioned, there was a decent delta in the trades. Vol was offered, gamma was bid on the trade, so that's why I'm so appealed to this range. And that's really what the guys in the pit are trying to do. They're trying to stretch this range out for as much as it's worth. Again, 92 half to 94 half. They can straddle it, and then they can come in, they can do a call spread, a put spread. So we'll probably see a lot of these options start to roll as today is options expiration. It's 2:30 at the bell, expires in 5 days. We got the outright contract expiring, so it's going to be decent volatility. Again, they're pretty much just about to finish the roll in the pit by today and tomorrow. So we'll see total roll in the pit, and then we'll probably see that July contract front month, and I'll be quoting July for you guys. So, all right, just so you guys know, it's going to be decent volatility, expiration. We're going to see some nice movement here associated with the trade today, so be prepared. All right, let's real quickly just take a look at some levels here, and I'm going to let you guys go, and then we'll just talk about natural gas. First, how about we talk about natural gas? Natural gas here, a little bit of an uptick, decent move up. Again, as I mentioned here, we settled above 407. That'd be kind of promising here for the bulls, and we got that settle above 407 yesterday. Our settle number, oh no, we didn't get the settle above 407 yesterday. Sorry, 406.90, but I'll still give it to the bulls. So let's wait for a break during our pit session above 410. We can get above 410. We'll see 420 in no time. Now, big variable today. Hold the brakes. Yes, that's true. We do have inventories, but we're looking for a build of 96 BCF. 96 BCF is the number. Anything above it, we'll be selling. Anything below it, we'll be buying. Any type of draw, we'll be buying it again. So very simple here. Anything above 96, selling. Anything below 96, we're buying. Any type of draw, we're buying 2 times. So basically, we're just waiting for a little break above 410. Again, don't poke your head out and don't get in before inventories. I mean, wait till after inventories. If we get the draw and we get something below the $96 level, 96 BCF level, which we could get, that'd be good. But for right now, we're kind of sitting sideways. So I would wait for the break, either break the 410 or break below $4 even to the downside, and that's the trade. You sell below 4, you buy below 410, above 410. And this inventory number, like I mentioned, you got to look at the reaction for the inventory number. All right, let me give you guys some levels, and I got to run. Alrighty, high from yesterday, 94.42. Your low from yesterday, 92.13. I had a close and sell on the crude at 94.23. We had a net change of $1.23 higher in the crude. Again, range of about $2.29. Daily pivot today, 93.59. Volatility was just about 29%, and open interest, as we talked about earlier. Okay, got resistance above at 95.05, 95.88, and 98.17. I got some support down below at 92.76, 91.30, and 89.01. Again, those are your levels on the crude. Levels for natural gas, as you can see, guys, this chart up here. Natural gas high from yesterday, 407.80. These are pit session highs. Once again, 407.80, low, 402.20. I had a close and sell of 406.90. 406.90, just falling short of that 407. We had a net change of 6 ticks higher yesterday, whopping 6 ticks. A range of 4 cents, 4 pennies. Daily pivot today, 406.30. Once again, that's 406.30 is going to be your daily pivot, and we're trading right below that right now, 405.90. So we're trading right below that daily pivot right now. Volatility. I have the implied vol and I have vol index, 33.5%. Open interest, 140,422. Resistance above 404.20, 409.90, and 413.50. Support down below on the board here, according to the pit. Let's see, guys. Let me see. They have support up here at 404.80, 402.70. And 399.10. I should just take a picture of this and send it to you guys instead of me reading it out every morning. But those are the levels, guys. As for your natural gas, again, pretty simple game plan of attack. We have inventories. We're going to be looking for 96 BCF, along with just a few other things this morning we have. We have just a couple pieces of data hitting the board, well, more than a couple. 8:30, we have a lot of news, guys. Let's talk about it real quick. Consumer Price Index, housing starts, and jobless claims all at 8:30. 9:45, Bloomberg Consumer Comfort Index. I got Philly Fed at 10 a.m. and then this natural gas report at 10:30. So a couple pieces of data, right? So we'll be looking out for all that stuff. It's going to be a pretty nice day with all the news and the fact that we're expiring here, guys, in the options today, and we'll be seeing a lot of movement, again, finishing off the roll. So we have a lot of things to look forward for today. The pit will be busy. Trust me, it will. And we will be trying to see how we do. We're going to capitalize on what we can make right here. I'm going to throw it back over to JJ. Have a wonderful day, ladies and gentlemen. I'll catch you all later on.
All right, Marty. As always, my man, thank you so much for the analysis. Thank you for the insight straight from the floor. And thank you to everybody for being here today. Thank you so much for coming in and joining me. My name is Joseph James. I'm from School of Trade. I provided a technical analysis approach. That was Marty Errico. Marty was talking from the pit. He's down the NYMEX Exchange, and he's broadcasting live with me every morning here at 7:30 a.m. Eastern Time for our screen-to-floor morning prep. Don't forget, Marty's got a broadcast with Traders Audio that starts at 8:50 a.m. just before the opening bell of the NYMEX. You can get in touch with him at marty@tradersaudio.com. And I run a live trade room at 8 o'clock in the morning. Each morning we open up our live trade room with members from all over the world. I'm JJ at School of Trade. Thank you once again for tuning in today. Don't forget those numbers. We've got a bullish in the short term, a bearish in the long term. Sounds like a broken record from earlier on this week, but I think we're all on the right track here. We've had a great week so far. We get a morning filled with news. Be ready for that 8:30 a.m. news. Be ready for OPEX on Friday. And come back and see us again tomorrow. Have a great day. Good luck out there. And don't forget, you got to learn it so you can earn it. We'll catch you guys next time. Adios, amigos. Bye-bye for now.